Hi, in this video we are going to understand what is a fixed asset. Till now we have worked on AP, AR and cash management. Now let's get into fixed asset module. Let us understand what is a fixed asset. Fixed asset is a tangible long-term asset with a useful life of more than 1 year, used for business purpose and not expected to be converted to cash soon, such as buildings, equipment or vehicles. So looks like this is a very big definition, right? Let us break it down and understand it. I have simplified it. I have break down this definition of a fixed asset. So we will make a purchase of building or vehicle, and this purchase, the result of that purchase has useful life of more than 12 months, and that purchase is used for business operations. We are not going to sell it immediately to the customers to make revenue out of that or profit, but instead we will use it for our business day to day business purposes. And yeah, so we won't sell it to get the cash. So these are the features or characteristics of a fixed asset, which determines that the purchase that we are making is a fixed asset or not. So I have given here some of the examples of fixed asset like buildings, equipment or vehicles. These are considered as fixed assets. And if you see here in the life of fixed asset, the first activity that we do is we purchase the fixed asset from the supplier or from third party. That is the first activity that we do, which in like here when we say purchasing, we are making an expenditure. So that is an expenditure to the company, and that this expenditure of money can result or treat as an expense or asset. Let's say if you are buying some raw materials, then that is not a asset, that is an expense, because we will be selling those raw materials by converting into a product to the customer in short period of time. So we determine whether it is expense or asset, the result of expenditure, whether it is an expense or asset based on the asset definition. That is what in define we have given here. So to understand this better, let us dig into this definition with some real-time examples. I have made a table to understand the definition and how we determine whether the purchase of a thing by using the cash is the result into expenditure and asset. So this table will help to understand what is a fixed asset, and it will give us some of the capabilities of fixed asset module in Oracle Fusion. We will get both the things here. So I'll go one example after other. Let us start with the first scenario. So if you understand this table, I have listed the scenarios, and these four columns, these three are taken from the asset definition. Is it a result is a tangible? Does it have a useful life of more than 12 months? Expected to convert into cash? All these are from the asset definition. And based on these things, are we going to say whether it is an asset or expense? So first five scenarios are simple, and next scenarios will require some more level of understanding. So let's start with the first one and we'll focus on the first five. Let's say organization pays salaries to the employees in a given pay cycle, maybe for once in 15 days or once in a month. The result is not a tangible result, because we are paying for the services that employee has given to the organization. That is not tangible, and it don't have useful life of more than 1 year, because we have to keep paying the employees every month for their services. Once we pay for this month, that is that life of service is over, then once they work for the next month we have to pay it again. And is it expected to convert to cash? No, not applicable. So this is an expense. Similarly, let's take another scenario. Organization buys raw materials to produce goods. Result is tangible. We are getting raw materials which are physical. And does they have useful life? Yeah, if we don't convert the raw materials and just keep in our inventory, they have useful life of more than 1 year for sure. Expected to convert to cash soon? Yes, because we are buying the raw materials to produce a product and sell to the customer and make profit out of it. That is the goal of the company, right? So we'll be converting them to the cash soon. So this is an expense. This is not an asset. And that like it can be treated as current asset, but I'm not going into that detail. Let us just go step by step. This is like big module, right? If you take many things at a time, we will get confused. So let us go in a simple way. The next thing is organization purchased land to expand its operations, and the result is tangible. It has more than 1 year life. And expected to convert cash? No. So land is an asset. It is a fixed asset. Organization construct a building for its operations. All these conditions satisfy, and this is an asset. Organization purchased machinery and vehicles for its business operations. Yes, this is an asset. Similarly, now these are some of the more we can say scenarios which we need to consider multiple attributes to confirm that whether it is an asset or a expense. Let us say our organization purchased office supplies like pens and papers for its employees to use for daily purposes, and the result is tangible. Useful life, if you don't use it, they will be there for more than 1 year. Expected to convert cash? No. But still, if you see these two rows, they have similar characteristics, but we consider it as an expense because these will have very small value. So they can be treated as an expense and sent into financial statements. Let's say income statement as an expense in the given month has the value of these things are very small. So we will be considering them as an expense. So in the real process we can ask, right, how will you drive that, how will you determine that they are expense even though they are satisfying these conditions? It's like at item level, when we create a master item, let's say for pens and papers, right, when we are creating a master item, if you define that item as an expense item, then it will be when we receive those items and they will be accounted as an expense and goes into expense accounts. That's how it goes to GL and books. Let us take the next scenario. Office purchase laptops for its employees. This also satisfies all the definition of the fixed asset, and this is an asset, right? And we want to track it. Now I have introduced a few more columns. Let us discuss about for this column wanted to track in FA module. So one thing we need to understand is all the fixed assets need not to be tracked in FA module. Like even it is an asset, it is up to us, up to organization, whether we want to track it in FA module or not. So there is a process how we ensure that this has to be tracked in FA or not. That control is there, that we will understand in the next videos once we get into that. So that I have included this column. That is the meaning of this column. So next, coming to the next scenario, right? So now let's assume we have a business case, right? If laptop whose cost below $800 should be tracked in fixed asset module, but not but to be treated as an expense. If organization buys a laptop of whose cost is $500, it is less than $800, then we have to track it in fixed asset, but it should be treated as an expense but not a fixed asset. If we The other scenario is, if you buy a laptop whose cost is more than $800, it has to be tracked in fixed asset module, but it has to be treated as an asset, not an expense. If we have such business case, and if we have implemented in Fusion fixed assets, that business case, and if organization buys a laptop whose cost is less than $800, even it satisfies the definition of fixed asset, right? And this is an asset. In item definition, it will be defined an asset item. Then there is a concept called value threshold or capitalization threshold. If we set it to $800, then this item will be tracked in fixed asset, but it will be tracked as an expense asset. Now we are introduced to a new term, asset type. We will discuss these asset types in detail. If So it will be tracked in fixed asset, but the type of the asset will be expense asset. It means that once that asset is created, or once that item is received from the suppliers and invoice is paid, the accounting information immediately goes to expense accounts, and it will be treated as an expense in the income statement, and asset will come to fixed asset module, and it will be tracked in fixed asset module, but it will have asset type as expense asset. And uh, yeah, that is the difference. I want to introduce one more term, depreciation, but let me do that later, not now. Let us take another scenario. Then we purchase the laptop whose cost is more than $800. Then it satisfies all the uh, like fixed asset criteria, and this is an asset, and an item also, it is defined as an asset item. And the capitalization threshold is $800, so we bought a laptop whose cost is more than $800, and we want to track it in fixed asset module. Then this will be received from the supplier, and AP invoice will be created and paid. After that, it will be transferred to fixed asset module with asset type as capitalized asset. And this let's say if you bought it for $2000, then it won't go to income statement as an expense immediately. It will be done over a period of time that we will discuss later. So just introduce yourself to few words like asset type. And now we have seen two kinds of asset types, expense asset and fixed asset. Expense asset is something which will be tracked in FA, but it will be realized as an expense immediately in the income statement. Capitalized asset, it is an asset which is tracked in fixed asset module, but it won't go into income statement immediately as an expense. So now let us understand nature of the asset. So the value of assets depreciates over time gradually. Let's take vehicles, right? Vehicles will have some lifetime. If you have bought a car, you can use it for 10 or 15 years, not more than that. Even government won't allow that, right? And if you want to sell it after 1 year, after 2 years, after 3 years, the value keeps decreasing. If you bought it for 10K dollars, then after 1 year it may be 8K, after the second year it may be 6K, like how it keeps on decreasing, right? Even building value also will keeps on decreasing, machinery. So fixed assets value it keeps on, it is a depreciating, right? Over a period of time it gradually depreciates. That is the nature of the fixed asset. Let's understand that. And there can be some exceptions where we don't, they won't depreciate. Let's say you may get that question, right? Let's say land, if you bought a land in a busy place, let's assume in a good place, which will be keep on increasing, or maybe stagnate, generally it won't decrease. Then how do we track that? So keep hold on to that question, we will discuss that later. Mm, okay. So generally the basic nature is the value of fixed assets reduces gradually. Just make note of that. This is important point to understand. So before we get into key takeaways, I have made a flow diagram just to understand whatever we discussed visually, so that you will have some picturization of what it is. Organization will make an expenditure, means it buys something from suppliers, right? Like maybe vehicles, building, or machinery, or laptop, or anything, right? So it buys it, we call, as we are using our cash to buy that, we are saying that is an expenditure. So we make an expenditure and it gives us a return in terms of item or service. And then should we consider that as an asset? That is the first question, right? So yes or no. So this determination will be done based on the asset definition that we have discussed, and we understood that with multiple examples. So based on that we will determine if it is an asset or not an asset. So in not an asset case, like we have seen, paying salaries for the employees or power bill. Let's take, if not, if it is an asset, right? Then we have a question, should we track that in the fixed asset module in Oracle Fusion instance? So here also we have two options. Even if it satisfies the asset conditions, asset definition characteristics, we may want to track it in FM module, or we may not want to track it in FM module. So that there is a process to control this, that we will see in the further videos. And let's say if we don't want to track it in FA module, then that will be an expense, and it goes into income statement as an expense in the same period in which that is purchased. Some examples are office supplies like pen and papers. And if you want to track it in FA module, right, then the next question, do you need to record depreciation? So this is the first time we came across the word depreciation. What is a depreciation? So if you see, we have seen the nature of fixed assets. Fixed assets depreciates over time, means the value of the fixed assets depreciates, reduces year by year. Depreciation nothing but reducing. So if we have a fixed asset and if its value is reducing, do we need to record that reduce in value, month, period by period? For each month should we record that reduce in value? So no or yes, right? uh, if you say, if you want to, even if it has, if we are tracking it in FA module, if you don't want to record depreciation, yes, that we can do that. There is a threshold, we can set a threshold saying that if value is less than, if you remember the example of $800 laptop, whose value, if you buy $600 laptop, we don't want to record that depreciation period by period. We want to consider total value as an expense in the same period when it is created, right? And that is the thing, right? There is a setup, some threshold setup, which helps to achieve this. We won't keep recording depreciation month by month. And if you want to record depreciation, let's say the other scenario is a laptop with whose cost is more than $800, or it can be buildings, vehicles, right? Then again we can use the same threshold concept to, uh, yeah, to record the depreciation in each period. Hope this flow diagram helps to visualize the examples that we have discussed and how it flows from the point of purchasing. So when I say expenditure here, we are making a PO and we are purchasing and we are making a AP invoice and making a payment. That's when this expenditure is done, right? Once cash goes out of our bank account and we received an item or service, and then we determine whether it is an asset or expense, right? If it is an expense, if it is an asset, do we need to track that in our fixed asset module? Yes or no? If it is yes, if you want to track that in fixed asset module, do you want to uh, realize that cost, that expenditure as an expense in the same period, or do you want to realize that expense or expenditure over the life of the asset in the income statement? This is the second scenario. And how you control that? We have a threshold, and there is a process even to send the data to fixed asset module. Now coming, I have this key takeaways. um, this is again, we have kept the definition. Expenditure can result in asset or expense. We can determine which item can be tracked in FA module. This is all in the flow diagram. We can track expenses as well in fixed asset module with asset type as expense asset. We can track assets which depreciates over time in FA module with asset type as capitalized asset. So this is the asset type which we are introducing now. The value of capitalized assets depreciates gradually over time. The value of expense assets will be decreased immediately. It means that that value will be realized as an expense into the income statement in the same period. In other words, we can say when we receive that item and pay the invoice, the dollar amounts goes into expense accounts into the GL. That is another way of expressing that. I think hope this video gave you some understanding of what is a fixed asset and how things works. I hope I introduced you to few capabilities of fixed asset module in Oracle Fusion. Thank you. In the next video, we will understand what is the significance of fixed asset module and how it helps us to maintain the financial uh, well-being of the organization, right? To keep the financial records up to date or correctly, how this fixed asset module will help, that we will discuss in the next video with the topic as significance of fixed asset module. Thank you.